India's strikes were tactical, but their impact is strategic, and the ripple effects are now being felt far beyond the line of control. Tensions on the border are spilling over to the markets, and the impact is visible. Today, the Sensex fell over 412 points. This is a drop of 0.5%. The Sensex is an index of India's top 30 stocks. The Nifty also ended lower, down nearly 141 points. The Nifty tracks India's top 50 companies. Both these indices opened strong, but they lost steam as the day wore on. By afternoon, there was a fair bit of volatility. Banking, auto and FMCG stocks, that is fast-moving consumer goods, FMCG, all of these stocks came under pressure. Clearly, the investors were pulling back. The market turned defensive, and the reason was quite clear. The conflict with Pakistan was escalating.
India's stock market just lost $83 billion in 2 days. The reason? A border conflict that's turning nuclear-armed tension into investor panic. Hey folks, welcome back to the channel. Today we're diving into why the markets are bleeding, what Pakistan has to do with it, and whether your portfolio is heading for cover or combat. This all started Wednesday when India launched strikes on what it called terrorist infrastructure in Pakistan. That came after a deadly attack in Kashmir last month. Pakistan responded, and boom, cross-border tensions lit up the region. Friday wasn't pretty. The Nifty 50 fell 1.1%, but just managed to stay above the 24,000 mark, like a tired boxer barely holding the ropes. Meanwhile, the BSE Sensex slipped below 80,000, waving goodbye to its previous day's glory. And let's not forget Thursday. That's when the market warmed up with a 0.5% dip, just to hit us harder the next day. Out of 13 sectors, 12 went down. It's like a party where only one guy shows up wearing a tux, while everyone else got kicked out. That guy? Tata Motors with an 7% jump. Why? Optimism over a potential UK-US trade deal that could rev up its British arm, JLR. Analysts say India's economic fundamentals remain strong, and hopes of India trade deal might keep the market from completely falling apart. But let's be real. If the conflict escalates, even the strongest fundamentals will take a back seat to fear, uncertainty, and risk-off behavior. So, are we heading toward recovery or deeper red? That might just depend on what happens off the charts in the geopolitical arena. If you like this breakdown, hit that like button like Tata Motors hit the accelerator. And if you want updates before your stocks do the free fall, you know what to do. Subscribe. See you around.